Hello traders, my name is Frank Paul. I'm one of the instructors at forexmentor.com, and I'd just like to welcome you to this latest complimentary weekend video presentation which we make available to the members of the public every Saturday. This on the subject of adapting the FST method for day trades. This is a very important point. Our method is focused on swing trading, but that's not all you can do with it. I would suggest to you that any good trading method ought to be scalable, whether in the upwards direction, working with combinations of higher time frames for longer term trades, or in the downwards direction, working with intraday charts for shorter term trades, or somewhere in between. And that is certainly doable with our method. So what I'd like to do is document the recent experience of one of our members, George Pitcher, who reports great success in adapting the Parabolic SAR Triple Screen method which underlies Fibonacci Swing Trader for his day trading purposes. George recently sent me a note, which I'll show you in just a moment with his permission, which indicated that over a period of 8 calendar days from April 11th through 19th, George executed a total of 15 trade attempts using this system, of which only 3 were stop triggered, none for more than 20 pips, resulting in a win rate of 75% and a net profit of plus 499 pips. Not bad at all. In fact, that's darn great. And there are people who advertise win ratios slightly higher than that, maybe 80% or 90%, and that's great too, obviously. But when you're achieving the kind of reward to risk profile that is shown by George's results, you don't have to worry about the difference. 75% is great if you're never risking more than 20 pips and you're shooting for profit targets sometimes as high as 100 pips, resulting in reward to risk ratios of 5 to 1. So that is really fantastic performance. And the moral of the story here is that you can do it too, because our trading method that we're using here, whether you're scaling it down for day trading purposes or scalping trades or what have you or not, is still easy to use, relatively speaking. And we'll explain it in a nutshell in just a moment. So I'd just like to thank George for taking the time to share his results with me, which are conveyed by this email message. I've simply stripped away George's email address in respect of his privacy. So George has just briefly indicated that he's got some results here using the Parabolic SAR Triple Screen method, most for day trades, a couple held overnight. And there's a grid shown here documenting George's results. So you can see at the top the total net profit plus 499 pips. Only 3 stop triggered trades outlined in red font, the rest ranging anywhere from 1 pip, so that's essentially a break-even stop trigger, up to 100 pips. And that's not bad performance at all if you're focusing on day trades. Okay, so we're going to just in a moment pick apart one of these trades and just show you how it's done. Before we do that, I thought it would be useful to just reiterate the method in brief. This is just a very high-level summary, so please know that there are some additional nuances, but here's how it works. Our adaptation of Dr. Alexander Elder's triple screen method has us looking for the same parabolic SAR momentum rating on 3 consecutive time frames. Parabolic dots appearing above price on all 3 time frames is a bearish momentum reading, whereas parabolic dots appearing below price on all 3 time frames is a bullish momentum reading. We then validate that momentum reading by looking for evidence of market flow aligned in the same direction across at least one of the 3 time frames within the triple screen. After we've done that, we drill down to the next lower time frame and find evidence of a low-level correction denoted by a contrarian parabolic SAR reading on that time frame. So let's say our triple screen reading was on the daily 4-hour, 1-hour charts, and let's say it was a bullish reading. What we're specifically looking for when we drill down to the next lower time frame, the 15-minute chart, is a contrarian reading, a parabolic SAR reading that specifically runs contrary to that on the 3 higher time frames. And we use that information to try and find evidence of a low-level retracement. And simply, when the contrarian parabolic SAR reading on the lowest time frame flips into alignment with the triple screen reading on the higher time frames, you have a potential entry trigger. And that's about as simple as I can state it. When you see how easy it is to apply this concept, when we look at a chart illustration in just a moment, you'll realize that if you had any complexities in your trading methodology that were causing you difficulty, it's absolutely refreshing just how simple this approach is. So let's hit the pause button now, come back with some charts, and I'll walk you through one of the trades that George took in the time frame in question.